Hey guys, Matt here. Welcome back to this week's portfolio update. I like to show my portfolio once a week, somewhere around then, as I believe that sets me apart from other stock YouTubers out there, and that I show my receipts. Now, before I get into that, and the topic of today's video, I want to show you this right now. As of today, right now, I'm recording this before market close, obviously. It is not even a matter of debate. The NASDAQ, 30%, we have officially, this is an official crash as of year to date. Okay, now for the actual video, I'm going to show you my portfolio, all the moves I made, and I'm about to show you a stock that I'm really close to buying. But let's get through this first. Yeah, we are not doing well. The portfolio as a whole is down 9.1%, and it just keeps going down and down and down. We're sitting at just above 60,000, and I won't be surprised if by market close today or by next week we're back in it at 50,000 range. ARK is down majorly. Cisco had earnings where it didn't do too well. I'm not too surprised on Cisco's earnings because they're having huge supply chain issues, and I would consider them more of a fair weather stock. Like, they don't seem to be able to adapt to hardship at all. And not just the supply chain, the trade war, Cisco fell off. They just don't seem to be doing well. Now, this was a stock I was planning on selling once it hit a certain price, but the stock is going the wrong way, so right now it's a hold. Gevo is collapsing again. We got Palantir on his way back down again. We have FedEx back below 200 yet again. Facebook is approaching my cost basis. I mean, one of the good things about being in an actual crash now, like we were in a relative crash for the past year and a half, but one of the good things about being in an actual crash is that there are so many things I could buy, so many places to put money where I know that I will make money over the period of time once this economy rightens. I mean, look at Tesla, man. Tesla, we are below 650. If this gets into the 500 range, I may have to nibble off a few shares. See, so many options, so many options. Now, let me walk you through what I did this week. So, as you know, last week I put an extra $1,500. I bought some Intel this week. I bought some more Intel, and I bought some Palantir. So right now with Palantir, my cost basis is just over $7,000. We're close to where I want to get for money being put into this stock. Now, there is a stock, as I mentioned earlier, that I really want to buy, and it's giving me a lot of hardship, and I'll tell you why after we talk about the stock. So the stock is Target. Now, why am I looking for this stock? Well, I'm a stock buyer. I want to buy stocks, and eventually I want to add some to this position. Now, I was hoping to have Bank of America and Cisco going by now, but given where they are, there are more holds. But I want a stock that's not really a 10xer or a 5xer. I already have positions I have for that, like, for example, Palantir, Facebook eventually. I have a lot of stocks for that, like Revolve and, on a smaller note, Tapestry with my cost basis. Yeah, I want a stock that's safe for money that is undervalued. So yeah, we are going the value route in this. And Target, honestly, like, look at this. After the recent earnings, yeah, it has dropped well below a 15 cost basis. The PEG ratio for a value stock is really good, especially the price to sales ratio. Like, this is really looking like a snack. And I am not going to insult your intelligence by explaining what Target is. You already know. You already know what Target does. It's a major department store chain. It's supposed to be a relatively safe stock. Because, I mean, department stores, they have stuff that people need. And in most economic situations, they should make out presumably well. On a yearly basis, their total revenue is on its way up, which for a value stock is pretty freaking good. Their net income, it's on its way up. Like, everything was looking good up until this past quarter. This particular quarter, it was not the best. I mean, revenue was up 4% versus last year, which is great, but their operating income, man, that's what hurt them really bad, because that's what Target is known for, is their bottom line, right? be profitable. And this is a very clear indication that, I mean, this is nothing to do with the company itself, in my opinion. This is purely the macroeconomic situation we're in, because Target being a department store, I mean, supply chain issues, everything is more expensive. I mean, you got inflation, the Europe thing, the China thing, like transportation is more expensive, real estate is up. Like, there are a lot of things that are more expensive that are really, really eating into Target's bottom line. And not just bottom line, watch this. Target is, at least for this quarter, cash flow negative. I never thought I'd see that with Target. Now, this is a stock that I've been eyeing for some time. I haven't made a lot of videos about it because, I mean, I can't, my channel's not to the size where I can make videos about Target and have it actually make, you know, get views. I wish my channel could be at that size, but it just isn't there yet. But it's a stock I've been looking at for some time. And look, even with the huge markdown as far as EPS, and we got analysts just, you know, pegging these EPSs down based on the numbers that Target gave, because a bad quarter this quarter is probably going to be a bad quarter next quarter, and analysts got to factor all that stuff in. However, I mean, even with all that stuff factored in, I mean, they still have Target on the bottom line increasing pretty substantially for a value stock year over year, annually. And honestly, like, unless the economy breaks, I don't see how Target just can't bounce back from this. It's a department store. It's very popular. And as long as we have a functioning economy, this stock will bounce back. And the only reason I have not bought the stock yet is because my portfolio itself. Like, I already have so many children at home that I need to feed. I mean, I don't know if I want to go out and get a whole other child to take care of. You know what I mean? Like, I have all these stocks that are down right now. And these are stocks that a lot of them I have high conviction in. Palantir, Facebook, FedEx. I got all these stocks that are down that I think I want to keep putting money into. And I don't want to take care of a 16 stock, but I really, really like this stock. But there's nothing I want to sell in place of it. So that's my dilemma right now. And I don't know. Like, I might just end up buying a whole 16 stock. Maybe that's where I go. But with what capital? I keep putting money in, but if I want to start a new position, I want to put at least $3,000 or $4,000 in. And oh my God, I got some decisions to make. I really do. So yeah, I'll have to keep thinking about Target. And as far, I mean, given where the economy is going right now, I mean, yeah, I think I'll have a lot of time to think it over. Anyways, let me know your thoughts on Target, whether you think I should buy it now, whether I should wait, whether I should not buy it at all. Let me know in the comments. But anyways, take care, have a great day, and eat your vegetables.